Hi, welcome to the Market Alert for Tuesday, the 19th of June 2018. So, yesterday in the pound, we see the market starting to move higher, and then we see selling coming in, and then the market closing below both the 50 and the 20 bar moving average there, with some selling. So, you see the selling there, we get some buying pressure at the DP level. You can see that there it went through, it tried to come back, and then was hit by more selling, and then we see the buying pressure coming in, but they had one more slam straight down to the S1, and 80% of the time the market will bounce off the S1, which is what we see the market do here, straight back up to the DP, back again below the 50 bar average. You see the market move all the way down. How far does it move down? Just take out this here, and then from there to there it goes down to 76%, and it tests a bit of selling after, because those that are short or trying to go short I should say, they failed to do so, and then the US dollar is trading by this point. That moves lower and the pound moves higher, and you can see how the 76% retracement there held this market in check, and price is then moving back above the DP level today. So on the overnight the market's struggling a bit with the 200 bar moving average, but at the moment the market's above the 50 bar and below the 20, so we're holding there at the moment. So watch the R1 level if the market moves higher. Could be a bit of resistance there. Say 80% of the time the market gets to these levels, it will actually stop and reverse. In the daily chart, you've got to watch for the 76%, 132.68. We looked at this yesterday. The market below this yesterday, but has managed to come back so far, but it's going to have to drive through this in order to move back to the upside. Notice also the range for yesterday is very narrow as well. So again, just a warning, we're going into the summer when things do become a little bit quieter. Super Mario speaking again today, building permits from the US, and that's about it. It's a quiet week for news. I've just had a quick look through the Forex Factory website. Not a lot. Draghi's out again tomorrow, so that's 3 times this week. I don't know why, but he seems this week he wants to try and boost the market after telling everybody that they're not going to increase interest rates in Europe until 2019, and that's September 2019, during Thursday's speech that he gave, the live ECB conference. In the Dow, well, we've got a situation here where we see the market move lower, see some support come into the market, short covering. We know it's short covering because we didn't get a blast to the upside. We see some more selling there, and it's at the low of Friday. That's what the graded line is. The market comes back. Where does it come back to? Get the retracement tool out, and it comes straight back to the 62.76%. We're also at a psychological level here, which is the 24,850. The market closes back above the 20 bar average, closes back above the 50 bar average, finds a problem at the 24,900 level. I think that's 900, isn't it? Yep. But manages to sneak through, and after a small retracement back, then heads back up to the 200 bar average and the minor psychological level of 24,950. Market comes back 50 points, sits on the 24,800 level. Is that 800? I'll get it right in a minute. 900 level. And then you get another 76% retracement, and you can see how not only is there a downtrend here. If you were to draw a trend line in, you'll see it there, but it also ties in with the 200 moving average. You can see how that's moving there, and eventually it breaks through, it comes back. Let me just remove this trend line. You can see how the market sits on the trend line, but notice also how the 200 bar moving average now has become a support. We drive through, we take out the high here, however we're met with a bit of profit taking, and it's quite extensive as well because it's higher than the buying that we see there. Market comes back and again sits on the 200 bar average, goes back through the psychological level with new buying, and then trades sideways towards the end of the session. And at the moment the market is, drag the chart across, back below the 200 average, back below the DP, which is negative for the market, and we're also through the S1. The S2 is the next downside target. This is because Trump's increased his product list of tariffs against China. So the 200 is back above the 50 and the 20 is below the 50. We're below the S1, below yesterday's low, and we're heading for the S2. At the moment we've got the psychological level of 24,700 in the way here. So let's see how the market fares there. So later on today when this market opens, because we've gone down to the S2, normally we'd stop at the S1. We sailed through this, then we could expect a bit of a rally to begin with, and then more of a sell-off later on. But watch this level in the pre-market session. In the daily chart you can see exactly what's happening. The market's broken the trend channel that we've had marked in. We're below the 20 bar moving average now. Watch the 50 because this is going to be at that same level as the S2, and if it breaks that in the daily chart, watch the 200-day moving average. Also you want to keep an eye on these levels, just drawing these in as the market comes down. I'll just go to this one. These are areas you want to watch, and also watch out for this area. This is the big one in this chart. Let me just move this over. So watch for 24,500. That should be an interesting area of support should the market come down. Also keep an eye on these. But again, normally if we get to the S2, we're likely to see a bit of a rebound, unless there is something out there where the momentum will shift to the downside. That's going to be the determining factor here. And finally, in Bitcoin yesterday, it was really quiet. It was just managing $100 range. We had a sell signal here. We were below the DP. This type of price activity I've spoken of many times. We came down to the psychological level here of 6,400. That's the red line. Market comes off the low, the volume's great, the market sideways, finds support at Sunday's close, and the next thing you know, the market's tested, the market sees new buying coming through, and we drive straight through all the way up to the R3, all in one go. So straight through the R1, the high, the R2 and the R3. At the moment the market's above the actually just before we finish there, the market came up to 6,800. That's the high for yesterday. So a good blast to the upside, and that's how this market keeps reacting. You get absolutely nothing, then you get these spikes. It's very strange, and that's because of a lack of participation in the market at the moment. And then when the big boys see the chance, they will just hit it hard, and then they will take the money. And again, as far as this market is concerned, the market's moved higher, but it's on low volume. It hasn't really gone anywhere. You can see it's still sideways. It's still got to get through the 20 bar average. In the bigger picture, the 200 is there, the 50 is there. To me, it's still got to come back and retest this 5855 before it moves higher. as the expression goes, dead cats bounce, but they don't run away, and they're certainly not going to run away on that sort of volume. There's not enough energy there in the market to do that. Okay, that's a quick roundup of yesterday's price action and what was happening. And again, you can see, once you put all the pieces together, how to read these markets and predict what they're likely to do. So hopefully this has been useful, and if there's anything to report I will let you know, but other than that, as ever, thanks for watching. See you in the next one.